All right, good morning, everyone. This is Bob Maurer. It is about 9:45 a.m. on Saturday, the 12th of October. I want to do a review of our current seasonal futures spreads strategies, see how things are looking for the ongoing spreads. We are down to just a few. If you watched the most recent video I published, you would know that many of the strategies either hit their targets or primarily were canceled because they moved without us. But we are down to just a few now. So let's take a look at them. Shouldn't take very long. Down into the portal, you'll see the most current PDF version. Just loaded that a bit ago for this upcoming week, 10/13. And this is what we have. So three of them, top row, 321. Been looking at this one for about a month. And that is the bear spread in rice. I have made some changes. You see the gray background, so indicative of changes to our entries and exits. We'll take a look at that one. And then 327, the bear spread in natty gas. We're going to cancel that one. Take a look at that one first. And then lastly, bottom row, June, July, bear spread in hogs. We're still in that one and should be filled. So we'll take a look at how things are evolving there. Okay, first things first, let's hit that natty gas. So the last vid posted, market already had started to dip against us. All right, I think it was on about this day, coming towards the bottom end of this triangle. And I wanted to stay with it to see what would happen, either if they would bounce off this upward trending support line at the bottom end of the triangle and then push on up and get us filled, which would be great, or if it was going to break out to the downside and then we'd have to rethink it. And unfortunately, the latter happened. So it did move in the direction thought it would move, didn't allow us on board first. My interpretation of the back data was such that we should have been looking for some kind of price improvement as opposed to just getting in at the benchmark. Didn't quite pan out that way. I wish, if hindsight, if we could roll back time and just get in at the benchmark, that would have worked out great. But nonetheless, it's all about defining the risk. And I thought it best if we tried to get some price improvement on this seasonal, because there was a high tendency for this thing to move against before it moves for. And as you can see, it broke out to the bottom through the downside, through our target 2, through target 1, everything, and didn't get the bounce to the upside. So net, we are going to cancel this strategy, look for another opportunity in nat gas down the road. The seasonal worked out great, but unfortunately, we weren't able to get on board on this one. So please cancel 327. And again, it's trader's prerogative. If you want to stick with it for some reason, it's always up to you. The next two are ongoing. First of all, the bear spread in rough rice. And I have made some changes, so let's go over that real quick here. So originally our stop was at -7, and this is based on my revisions as of walking this forward as of yesterday. So the original stop was at -7. I am going to recommend that we drop it down to where the entry level 2 is at -12. So this -7 gets cancel replaced. We bring that down to -12. That way, at worst, it'll be a break even for the entry 2, level 2 traders. It'll be a bit less of a loss for the more aggressive average in traders. Second thing we need to do, based on walking this forward, is raise the targets. So original target 1 was -22. We're going to raise that up to -18. Original target 2 was -25. That is coming up to 21. Okay, so cancel replace the targets, cancel replace the stop. Now this is what it's looking like. And with that, obviously the risk reward changes. So the original gains and losses were as it shows here in yellow, and the revisions are in orange. So you can see the risk for the regular entry level 2 traders, the more conservative entry level, goes to 0 if you get filled at the stop, that is, and not including transaction costs, of course, you know that. And then the reward also comes down. So the risk goes down, but also does the rewards. And then about the same scenario for the average in traders. Risk comes down, but so does the potential gain. All right. So basically, we've been in a sideways range for several weeks now since the onset of this seasonal. Really, I guess maybe a little bit before that, we did have a probe to the upside. So the market had this swing high here in early September of -14. We got up to our entry of -12 a few weeks later. And since then, it's basically been between that -12 and -19.5. And we probed down towards the low end of the range yesterday, right? Got down to -18. So hopefully, what happens on Monday, Tuesday is this thing breaks on down, gets us at least target one, and then maybe we get stretched down to -21. All right. So tighten things up, tighten up the stop, tighten up the targets. And that's just based on my analysis of walking this forward. And we'll see what happens next week. We only have about a week and a half left in this particular strategy. So hopefully it plays out in our favor and closes on the weak side. That's number 321, Rough Rife's bear spread. And currently both entry levels are sitting with some level of unrealized gain. So all going according to plan. Rice. And then the last one is the Hoggers. So essentially both levels are filled and no change to the strategy. The entry level 2 traders, more conservative entry price, should be sitting with some level of modest unrealized gain, whereas the average in traders will be sitting with an unrealized loss. This thing is going to plan so far. Had a decent rally out of the gate and got high enough to get the entry level 2. Entry level 1 was right at the close of day 0. So we've seen a bit of a rally, then a bit of a break, and now yesterday the market actually ended up bouncing off this nearabouts this red line here, which is the 20-period exponential moving average. Walking this forward, it's interesting because the data gets better for us, in my opinion, starting in about a week. So we might have to deal with about a week of, when I say a week, about 5 trading days worth of heat, potential heat, right? Hopefully it just breaks on down and cruises right down to our targets. But my analysis of the back data suggests that steady to maybe a bit higher would be where it would roll over the next, 5 or 6 trading days. And then the data starts leaning in our favor for a move to the downside. So we'll just keep that in mind. All right. On average, if I recall correctly, the amount of heat we typically need to take most of the time is about 150 to 160 bucks worth of heat from, say, starting yesterday. So that's about 40 points higher, which would put us right about positive 25, 27, so right in here before it starts breaking down. So we'll see how it plays out. All right. We've got our risk levels. We understand where we're at, if anything needs to change, or if there might be a potential to maybe move the stop short term and you're willing to take on some additional risk. We'll just see how it plays out. Okay. But I'll let you know either way so you can make your own decision. So that's where we're at with this one. Okay. So both levels filled. No change to the strategy. Next 4, 5, 6 trading days, like I mentioned, are critical for us. And then we'll see if things start turning down where there's a bit more pressure in the market. All right, so that is bear spread strategy number 328. All right, so we're down to the 2. We got the rough rice, we got the hogs, and I made modifications on the rough rice one, so bear that in mind. Get on the phone, call your brokers, call your trade desk, or hop on your platforms and do what you need to do to go ahead and cancel, replace those if you want to follow along with my recommendations. Okay, so that's about it. It is Saturday morning. Hope everybody's enjoying their weekend, at least the start of it. Hope you got a nice weekend planned for yourself. Hope the weather's nice. And then we'll look forward to next week. I am going to probably finish up the analysis of a number of strategies that could be starting next week. So I'll get those out to you as soon as I'm got my higher level of confidence that they look publishable. Okay, I'm gonna leave it there. Thanks so much for watching.